Hello, everyone, and welcome back to KSP Knowledge Hub. If you're a new exporter, a student exploring international trade, or someone trying to understand how global payments actually work, today's topic will give you real clarity. Imagine you're an exporter shipping goods worth lakhs or crores overseas. The shipment is already on the way, but your payment depends entirely on whether your documents reach the bank, get checked correctly, and get approved without any discrepancies. For many beginners in trade, this entire process feels slow, uncertain, and sometimes stressful. And this is exactly why letters of credit were created to ensure that exporters receive payment once they submit the correct documents as per the agreed terms. For many new exporters and students studying trade, this part of the process feels slow and uncertain. And that is exactly why letters of credit exist to make sure the seller gets paid if they follow the agreed conditions. A letter of credit, or LC, is a bank's guarantee to the exporter. If the exporter submits all required documents in the right format, the bank promises to release payment. This system was created because buyers and sellers often don't know each other, and a bank acts as a trusted middle party. For years, this worked well. But today, with global shipments moving quickly and large volumes of documents being processed, the traditional LC system is struggling to keep pace. The biggest challenges in traditional LC processing are paperwork, manual document checking, courier delays, errors, and high charges. Even a simple typing mistake in the bill of lading or invoice can lead to discrepancies, causing payment delays. Exporters often spend days correcting documents and resubmitting them multiple times. Meanwhile, logistics are getting faster, but the payment system remains slow. This is where blockchain technology steps in. Blockchain is basically a secure digital network where every participant sees the same information at the same time. Once a document is uploaded, it cannot be changed or manipulated. In LC transactions, this creates a shared environment for the exporter, importer, banks, shipping line, and insurer. Here is how blockchain improves the LC process. First, documents such as the bill of lading, invoice, and packing list are uploaded instantly. There is no risk of losing papers or waiting for courier deliveries. Second, banks can check the documents as soon as they are submitted. LC conditions can be programmed into the system as rules, which means the system itself verifies whether the documents match the LC terms. Third, because records cannot be altered, risks such as fake bills of lading or modified invoices are significantly reduced. Fourth, the entire flow, from submission to approval, becomes faster, clearer, and more transparent for every party involved. Industries are already using blockchain based LC platforms such as Contour, Comgo, and Marco Polo. Exporters report that document processing time has reduced from several days to a few hours. Manufacturers get faster access to working capital. Commodity traders prefer blockchain because it reduces fraud risk. Freight forwarders and logistics providers benefit because documents are available digitally, which speeds up container clearance and reduces delays. Another important factor is cost. Traditional LCs involve several charges: opening fee, advising fee, amendment fee, document checking fee, courier cost, discrepancy cost, and manpower cost. When these are combined, exporters often pay between 0.75 to 1.5% of the shipment value. Blockchain based LC systems usually involve much lower handling fees. There is no courier charge and discrepancies reduce dramatically, which means fewer penalties. Overall, exporters often save between 40 to 60% on LC processing. For new exporters and students learning trade finance, understanding this shift is important. Global trade is becoming digital. Banks, shipping lines, and large corporates are already moving towards blockchain because it increases efficiency, reduces errors, and speeds up payments. In the coming years, this will become a common method of handling LCs, and exporters who are familiar with it will have an advantage. This transition does not remove the LC. It simply makes the LC more efficient, more secure, and more aligned with modern trade volumes. For anyone planning to build a long term export business, Adopting digital LC systems will help improve cash flow, reduce operational costs, and create smoother relationships with international buyers. If you found this explanation useful, make sure to like this video, subscribe to the channel, and stay connected for more practical, easy to understand insights on international trade. You can also reach out through the channel or email for queries related to exports and documentation.